Ever feel like someone's kind of like messing with the economy, like making your mortgage payments go crazy? You're just totally tanking your investments?
Yeah.
I know I do. And oftentimes it's the Federal Reserve, or at least that's what we hear, right?
Right.
So today we're diving deep on the Fed. We're actually going to be using excerpts from their own Wikipedia page as our guide.
Oh, interesting.
So get ready to unpack how this sometimes mysterious entity really impacts your financial life, everyone.
Yeah, it really is fascinating how much influence the Fed actually has. I mean, people think it's just about setting interest rates, but, it goes so much deeper than that. It really is about shaping the entire financial landscape that all of us operate within.
Right, and we're going to get to all that. But let's start with some history here.
Yeah.
I mean, the Fed, it wasn't just like poof, magic, it appeared.
Right.
There's a reason for it.
Mm-hmm.
It was born out of chaos. Do you remember the panic of 1907?
Oh, yeah.
Banks collapsing left and right, people losing their life savings.
Yeah, that was a really, really terrible time. It really exposed just how fragile the U.S. banking system was. And, thinking back, it wasn't even the first time that something like that had happened.
Oh, really?
Yeah. So we had the first and second banks of the United States,
Mm.
and they were both early attempts at central banking in the U.S., and both of them ultimately failed. But, every time something like that happens, every time there's a failure, you kind of learn something. And so it kind of paved the way for, future attempts to get it right.
And that brings us up to 1913, right?
Mm-hmm.
From the ashes of 1907 rose the Federal Reserve,
Exactly.
aiming to, prevent these future calamities from happening.
Yeah.
And so what did they do? They gave it a dual mandate. They said, okay, Federal Reserve, your job is to maximize employment and stabilize prices.
Sounds easy enough.
Yeah, right.
Like,
Well, and they defined stabilizing prices as keeping inflation around 2%.
right. And that in itself is a very deceptively simple goal because, to actually achieve both of those goals, maximizing employment and keeping inflation around 2%, it takes a constant, kind of readjusting. It's a very delicate balancing act.
Yeah.
Because, the economic landscape is constantly changing.
Right.
And it's important to point out that the Fed actually goes beyond just those two mandates. So in addition to those, they also supervise banks. They're also responsible for ensuring the stability of the entire financial system. And then they also provide certain financial services to institutions.
Wow. I mean, that is a lot.
It is a lot.
That's a lot of responsibility. Right. And so no wonder people get really intimidated when they're trying to understand all of this. So let's break it down, right? How is all of this power structured? Is it just like one, all-powerful person behind a curtain making all these decisions?
Thankfully not.
Okay, good.
So the Fed, it's more like a complex organism. I like to think of it as an organism with these interconnected parts. So at the top, you have the Board of Governors. They are appointed by the president and then confirmed by the Senate. And get this, they serve 14-year terms.
Wow.
Talk about job security.
A long time.
Yeah. And then you have the Federal Open Market Committee, the FOMC.
Okay.
They are really like the brains behind monetary policy. So, we're starting to see the layers here.
Yeah, okay, yeah, peeling it back.
But there's more.
Oh, great.
So then you have, in addition to those two groups, you also have the 12 regional Federal Reserve banks, each with their own president, and then all those member banks across the country. So it's this really unique structure, and it's designed to try to balance the public and private interests.
Wait, hold on. Member banks, what does that even mean? So, like, my local bank is part of the Fed.
So nationally chartered banks, they're actually required to hold stock in their regional Fed bank. And they actually get a dividend on that stock, too. But it's not like owning regular stock, right? You can't just sell it whenever you want.
Interesting. It's like they have a little bit of a voice, but not full control.
Exactly.
Okay. Now, this is starting to make a little more sense.
Good.
So you're saying that this whole structure really influences how the Fed implements its monetary policy.
Exactly.
Like its toolkit for shaping the economy.
Right. And that's exactly right. And we can talk about that next.
Okay, so let's dive into that toolkit. What's their most powerful weapon?
Well, I would say one of their most potent tools is the federal funds rate.
Okay.
Or FFR for short.
FFR.
Yeah. And it's basically the interest rate that banks charge each other for these like overnight loans.
Oh, okay.
No.
So it's like a baseline for interest rates.
Yeah, you can think of it that way.
Yeah.
It kind of sets the tone for the entire banking system.
Got it.
But here's the thing. The Fed, they don't just set the FFR like arbitrarily.
Right.
They influence it through a lot of different mechanisms.
Okay.
And their biggest tool for doing that is something called open market operations.
Open market operations. Okay, that sounds kind of scary.
It does sound a little bit like, cloak and dagger.
Yeah.
But it's actually simpler than it sounds.
Okay, good.
So basically, the Fed buys and sells U.S. Treasury securities.
Okay.
And those are basically just, like government IOUs.
Oh, okay.
And by doing that, buying and selling these securities, they can control the money supply. So when the Fed buys securities, they're essentially injecting money into the system, which then lowers interest rates.
Okay.
And that stimulates economic activity.
Got it.
But when they sell securities, they're pulling money out of the system, and that raises interest rates,
Okay.
which can potentially slow things down.
So it's like they have this giant financial gas pedal and brake,
Yeah, exactly.
and they're the ones controlling it.
Exactly. And,
Yeah.
keeping the economy humming along smoothly,
Right.
it really does require this constant balancing act. They have to be very careful.
Right.
But anyway, so we've got open market operations, but that's not the only tool that the Fed has.
Okay, what else?
So they also have something called the discount rate.
The discount rate. Okay, break that down for me.
So the discount rate is basically the interest rate that banks can borrow directly from the Fed.
Mhm.
So it's kind of like a last resort
Okay.
for banks that are in a liquidity crunch,
Yep.
if they really need cash.
Right.
And it's typically set higher than the FFR, the federal funds rate.
Okay.
And that's to encourage banks to borrow from each other first.
Makes sense. So it's like a safety net, but with a little bit of like a penalty fee.
Exactly.
So it discourages overuse.
You got it.
I like that.
So you've got open market operations, you've got the discount rate,
Right.
but what if those aren't enough? What if the economy really needs like a serious jolt? Like what if things are really, really bad?
Yeah, what do they do then?
Well, that's where quantitative easing comes in.
Quantitative easing.
Or QE.
QE. Okay.
Yeah. And this is a more unconventional tool.
Okay.
It's often used during times of crisis,
Got it.
And remember those U.S. Treasury securities we were talking about?
Yeah.
So with QE, the Fed, they don't just buy those.
Okay.
They also buy corporate bonds and mortgage-backed securities.
Oh, okay. That sounds like a really big intervention. Why would they do that?
So it's all about injecting a ton of liquidity into the system,
Okay.
which lowers long-term interest rates.
Okay.
And that encourages lending and investment.
Hmm.
So you can think of QE like a financial defibrillator
Oh,
to kind of jumpstart a struggling economy.
Yeah.
Like when the heart's not beating right, they shock it back into rhythm.
Right.
That's QE for the economy.
Got it. But I mean, I imagine like any powerful tool, it's got to have some risks
Well, of course.
and some controversy.
Absolutely.
So what are those?
Well, for QE, some critics argue that it can actually distort the market
Okay.
and lead to artificially low interest rates,
Mm-hmm.
and then asset bubbles, which could, of course, eventually burst.
Right. Okay.
And then other critics, they worry about the long-term consequences of the Fed amassing this huge balance sheet.
Hold on. Balance sheet. What does that even mean in this context?
So imagine the Fed's balance sheet like a giant financial ledger,
Okay.
okay? And on one side of the ledger, you have all the assets that they own.
Okay.
So that includes, treasury securities, mortgage-backed securities from QE.
Right.
All that stuff is recorded on one side.
Okay.
And then on the other side, you have liabilities,
Okay.
things like currency in circulation and reserves held by banks.
Okay.
And so when the Fed engages in activities like QE,
Right.
their balance sheet expands dramatically because they're buying up all these assets.
Right.
So they're essentially taking on more risk in order to try to stimulate the economy.
Got it. So what are the potential downsides of having like a really, really large balance sheet? Could it lead to instability in the future?
Yeah, that's one of the big debates surrounding the Fed, for sure.
Okay.
Some people argue that a large balance sheet could limit the Fed's flexibility
Okay.
to respond to future economic challenges.
Okay.
Right. Because they've got all these assets tied up.
Right.
And other people are worried that if they try to unwind the balance sheet, by selling off all those assets, that could disrupt markets and trigger all these unintended consequences.
Wow. It sounds like the Fed is walking this really fine line between stimulating growth and maintaining stability at the same time.
Yeah, it's a tough job.
Right.
Really is.
But beyond all these technical aspects of it,
Right.
what does all of this actually mean for everyday people listening right now?
Yeah, that's the important question. Like,
Yeah. How do these actions actually impact our lives?
right, because all this talk of monetary policy and balance sheets, it can feel really abstract, right?
Yeah, it does.
But it actually affects things like the interest rates on your mortgage,
Yeah.
your car loan,
Hmm.
the value of your investments, even, the prices at the grocery store.
Okay, so let's connect the dots for our listeners.
Sure.
How do the Fed's actions trickle down to our everyday financial lives?
Well, for example, let's take interest rates.
Okay.
When the Fed lowers rates through, open market operations or any of those other tools that we talked about,
Right.
it becomes cheaper to borrow money,
Good.
right? So that can encourage businesses to invest more, to hire more workers,
Right.
boost economic activity,
Right.
And consumers, they might be more likely to take out loans for things like homes and cars, which leads to more spending,
Right.
stimulates the economy.
So lower rates can actually stimulate the economy and potentially lead to job growth.
Exactly, yeah.
Okay.
But of course, there's always two sides to the coin.
Right.
Lower rates can also lead to inflation.
Right, where everything gets more expensive.
Exactly, yeah. Where the prices for goods and services start to increase.
Right.
And that's why the Fed is always trying to find that balance.
Yeah.
Right, remember that dual mandate.
Yeah.
They're trying to stimulate growth, but they also don't want to let inflation get out of control.
Right. It's like walking a tightrope.
Yeah.
What about things like QE? How does that impact everyday people?
Well, QE, the impact of QE is more indirect.
Okay.
But it's still really significant.
Okay.
So by buying those corporate bonds and the mortgage-backed securities,
Right.
the goal is to lower those long-term interest rates,
Okay.
which can make it easier for businesses to access capital, invest, potentially lead to more jobs being created,
Right.
Lower mortgage rates can also, help people afford homes more easily.
Right.
So it can boost the housing market.
Okay.
Yeah.
But as we talked about earlier, there are those critics of QE.
Yeah.
They're worried about those unintended consequences.
Yeah.
Like the asset bubbles and market distortions.
Yeah, they argue that, by pumping so much money into the system,
Right.
the Fed is kind of artificially inflating prices of things like stocks, real estate, which could lead to instability down the road.
Right.
They also question whether QE really helps the economy as a whole,
Okay.
or if it just helps the people who already own those assets.
So it seems like the Fed's actions, they could be a little bit of a double-edged sword.
For sure.
They can stimulate growth. They can help people access credit.
Yeah.
But there's also the risk of inflation
Right.
and market distortions.
For sure.
So it makes you wonder, are there other ways to manage the economy?
That's a really big question.
Yeah.
A complicated debate,
Yeah.
There are definitely different schools of thought on how the Fed should operate.
Right.
Some people think they should take a more hands-off approach.
Okay.
Just let markets do their thing. Others believe the Fed should be more active,
Okay.
Stepping in to prevent crises, promote stability.
Wow. It's just fascinating how this institution, which can seem, so obscure to people,
Yeah.
can have such a huge impact on our lives.
Absolutely. It's really powerful.
Yeah.
Yeah.
It can be daunting to try to understand all of this. So for the average person listening right now, what can they do to kind of navigate this really complex financial world that we live in?
Well, knowledge is power.
Okay.
So the first step is just being aware, understanding how the Fed works,
Right.
what their goals are, what tools they use.
Okay.
And that can really help you anticipate potential economic shifts, make more informed financial decisions.
Okay, so stay informed.
Exactly. And, the Fed, they make policy decisions, they make announcements, they put out economic forecasts.
Right.
Staying on top of those things can give you really valuable insights.
So it's all about being proactive, not reactive.
Yeah, exactly.
Yeah.
And remember, the Fed, it's not just this, all-powerful entity operating in a vacuum.
Right.
They are accountable to Congress.
Right.
They're accountable to the American people. So by engaging in conversations about the Fed, asking questions,
Right.
holding our elected officials accountable,
Yeah.
we can actually help to shape the economic policies that impact our lives.
That's a really powerful message to end on. The Fed might seem like this big mysterious force out there, but understanding its influence, like you said, knowledge is power.
Exactly.
That's the first step to taking control of your own financial future. Thank you so much for joining us on this deep dive into the Federal Reserve.
Yeah.
Hopefully everyone listening out there is leaving with a much better understanding of this really powerful institution and how it can impact your life.